Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 5:30 in New York on Thursday, 14th day of December 2023, and this is the daily report for gold and silver. The pivot by the Federal Reserve from hawkish to dovish has resulted in large gains in gold and silver and a major decline in the U.S. dollar. Gold basis, the most active February contract, has gained over $51 in the last two trading days, opening at $1,995 in New York yesterday and currently priced at $2,051.30. Today, we're showing a net gain of $8.20 and a significant gain yesterday of well over $45 to reach current pricing. Of course, we are long from 2020. We did send out a trade alert today, raising our stops in both gold and silver. In the case of gold, we moved our stop up from $2,026 to $2,035 after entering at $2,020 yesterday. All traders should have adjusted their stop upwards to $2,035. Yesterday's pivot by the Federal Reserve propelled gold to higher prices, gaining a tremendous amount yesterday as it opened at $1,995 and closed at $2,043. An additional $8 was added today. In terms of our current exit strategy, first, we did move our stop up just behind what I consider to be the potential support level. It is based on today's low as well as yesterday's close. This, of course, is a short-term level. My assumption is that if we are going to really see a bullish rally develop and be sustained, it would be characterized by a series of higher highs and higher lows and higher closes on a daily basis. When we compress this chart, what we will see is that recently, from these lows back in October, when we look at the lows, we have a higher low here and now a higher low here. So we have had two higher lows as well as two higher highs. That is significant because what that tells us is that this sell-off that occurred recently, starting really at the beginning of December, along with this sell-off that occurred at the end of the October rally, were small corrections in a bullish market rather than the conclusion of the bullish market sentiment that really began at the beginning of October and carries forth through this day. In terms of our exit strategy, as you know, I have raised stops twice, and we only entered the market yesterday before Powell's press conference. And the reason is, as we get closer to the holidays, I do expect volume to begin to thin, and volatility could be the net result of thinning volume. However, I do believe that we want to look at closing prices, 2,067, and this, of course, occurred on Wednesday, the 29th of November, as well as Friday's, the highest close on record, in which gold closed at $2,092, which means that in terms of our upside exit strategy, I do believe there's a very realistic opportunity to see gold challenge $2,065 near this close here, and in a best case scenario, to either challenge or exceed the all-time record close at $2,092. Traders, maintain your current long as well as your current stop. Unquestionably, it was market participants bidding both gold and silver higher that was the primary cause for the spikes that we have seen over the last few days. But the dollar has played a significant role, considering that it opened at 103.82 yesterday and is currently fixed at 101.96. That is approximately a 2% drop in the dollar index in the last two trading days. Gold has gained well over 3% over the last couple of trading days, and silver has gained over 6%. So while the dollar was a strong contributor, it wasn't the major contributor, especially in the case of silver. And speaking about silver, we went long yesterday at approximately $23.41. We have raised our stops also twice, sending out a trade alert today to raise our stop in silver from $23.60 to $23.90. All traders in silver should have their stop now at $23.90. Silver is currently trading at $24.47 and has broken above a Fibonacci retracement of 38.2%. It's a pretty long data set. This is a 4-hour chart that I just compressed to show the entire data set we are using. Just as we are doing in our gold trade, we will continue to raise stops if the market continues to move favorably in our direction, which is higher. My upside target for this trade in a best case scenario comes in at around $25. It is based on the 23.6% Fibonacci retracement. We'll cover our exit strategies for gold and silver in greater detail on our final show of the week tomorrow. Maintain your current entry price and our raised stop at $23.90. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.